some of the lessons that we teach, we talk about portfolio structuring and what particular instruments should be in your portfolio, right? And there are basically 3 classes, but it can be more depending on how complex you want your portfolio to be. So we have the low risk portfolio, then there's the medium risk, then there's high risk. High risk is sports betting, crypto, in my opinion, binary options, etc. Medium risk will be stocks, right? And then low risk will be mutual funds, fixed deposits, etc. So someone asks, where does commercial papers fall into? A commercial paper is a company issuing a short-term instrument. Short-term is maturing before 1 year. So they issue a short-term instrument mostly to take care of working capital, right? Depending on the credibility of the company that's issuing, because commercial papers are generally unsecured. So there's no asset waiting anywhere saying that if people default on their commercial papers, then you can now use this asset to settle investors. Sometimes there's a bank guarantee, from a bank or etc. But basically, generally, it's unsecured. So why do people buy? And it's actually rated as a safe instrument, although the interest rate is higher than treasury bills. So why do people feel commercial papers are, low risk? I would say it's for 2 major things. The first thing is people that issue commercial papers, they're already big names. They have ratings from several rating agencies, and they've generally done a lot of work in their industry. Second thing is, it's usually short term. So the shorter the term, the lower the risk, because we will now know what the result is after 180 days, as opposed to you issue a bond for 5 years and then anything can happen from now till 5 years. So the amount of things that can happen from now till 5 years are less risky, quote and unquote, because Nigeria will shock you, than the amount of things that can happen from today to 180 days. So commercial papers, excellent choice of instrument to have in your portfolio. Everybody should have them for things for monies in your possession that you want to invest at a higher rate than treasury bill markets and fixed deposit markets. Something that you want to invest higher than that, but you want to still enjoy relatively the same level of safety.